think we okay. 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 So we have done on the TOC. Okay, today we go to the second part. Okay, first we have looked at to the TOC. This is section C. Okay, where in order to gather sufficient appropriate audit evidence, you have to perform the test of control. Okay, today we look at to section D. Okay, where you have to perform the substantive test. Okay, substantive test. So you go back to the time frame. Okay, so you have your interim audit and final audit. Okay, so now you already finish uh, your interim audit where you have able to determine the nature, timing, and extent of audit procedures. Okay, so for your TOC, okay, you will be able to first conclude whether the internal control system of the company is effective or not. Okay, then when the internal control system is effective, so you if let's say it is effective, so it divide into two, effective and not effective. So you only perform the TOC when you rely on the internal control system. Okay, when the system is effective, it can reduce the substantive test. So this is your extent of audit procedure. Okay, if the system is not effective when you have test the system, so you will identify the deficiencies. Okay, when you identify the deficiencies in the system, this will create the possible of material misstatement. So when you perform the test of control, so when there are the possible of material misstatement, okay, what should you do next? You have to extend the audit procedures. Okay, when you extend the audit procedures, you have to perform tests of detail. Okay, test of details. Okay, you have 3. Okay, you have the analytical procedures. Okay, you have to perform the test of detail. Okay, test of detail you have only 2. Okay, sorry. Okay. Okay, test of detail. You have details of transaction and details of balances. Transactions and balances. Okay, and on top of that, okay, so you in general you can say that you have to perform the substantive procedures. Okay, substantive procedures where the first you can perform the analytical procedures and the test of details. Okay, transaction or balances. Okay, so in order to achieve or to perform the test of transaction or the test of balances, okay, you must relate back with the types of audit procedure, okay, that you have learned before this, and also, okay, you must relate back with the financial statement assertion. Okay, so as I said earlier, there are no new things okay, on the application okay, of the test. Okay, so this is only the application of the audit procedure okay, using the substantive procedures. Okay. So today we look at okay, before that, okay, what is actually the objective? You perform the substantive procedures. Okay, the objective when you perform the substantive procedure is to gather sufficient, appropriate, okay, audit evidence. Okay, so you must know that when you perform the substantive procedure, okay, again you have to look at whether you are performing the transaction or balances. Then it should meet okay, your audit procedures. Okay, must meet the transaction or balances objective. Okay, so in other words is assertion. Okay. Okay, today we look at to the first substantive procedures. Okay, that is analytical procedures. So for the analytical procedures here, okay, actually okay, it affect the whole audit process. So remember in the audit planning stages, okay, audit planning, okay, you perform the analytical procedure. Still remember not? During the audit planning. Okay, you perform the analytical procedure. Is it correct or not? Still remember? Fitri? Still remember, Fitri? The analytical procedure that you learn in audit planning chapter. Why you perform the analytical procedure at the planning stage? Fitri, you hear me? Fitri?
Yes.
Do you still remember the analytical procedure that you perform during the audit planning? Dah lupa dah? Okay, what is the stages?
Yang ada 4 tu ke madam?
4? Mana yang 4 tu? Analytical procedure during the audit planning. Ingat tak? Okay, you are how many stages you can perform the analytical procedures? Stages. Okay, first during the audit planning. Okay, second during the substantive procedure. Dah lupa ni. And the third one is during the audit review. Okay, when you perform the analytical procedure at the planning stage, okay, what is your objective? Okay, to identify any possible of material misstatement. Okay, for during the substantive procedures, okay, you are going to perform the substantive procedure to extend the audit procedures. Okay, during the audit review, okay, to compare understanding okay, to see okay, if the financial statement are consistent, okay, with the auditor's knowledge. So your knowledge at the beginning and the end, okay, should be same. Okay, the knowledge of the business. When you do your audit planning, you perform the analytical procedures. So when you perform the analytical procedure during the audit planning, okay, you must be able to identify any possible of material misstatement. Okay, and then you perform the substantive procedures, okay, to extend the audit procedures, and during the audit review, you want to see, okay, whether if the financial statement are consistent with the auditor's knowledge, okay, of the business. Okay, analytical procedure ni actually ni apa? Okay, so you have to compare. Okay, it's a ratio analysis. Still remember. Okay, it's a ratio analysis. Okay, that is the analytical procedure. I hope you still remember back what you have learned before, okay, on the analytical procedure. So in this topic, we are going to look at when you are going to perform the analytical procedure together with the accounting estimate. Okay, today we will look at two parts on the analytical procedures and the accounting estimate. So for the analytical procedures, okay, this is the definition. Analytical procedures consists of evaluation of financial information made by a study of plausible relationship among both financial and non-financial data. So you must study the relationship, okay, between financial, okay, both financial and non-financial data. Okay, and then analytical procedure also encompass the investigation of identified fluctuation, okay, and relationship that are inconsistent with other relevant information or deviate significantly from predicted amount. So when you do your ratio analysis, okay, one of the analytical procedure performed by the auditor is ratio analysis. So you have to compare the performance of the company year. Okay, if you compare the performance of the company between year, so year X1 with year X2. So if let's say you compare the gross profit margin, okay, so X1 the profit margin is, let's say, 10%. X2 the profit margin is 5%. So you have to put a remarks here. Okay, identify where have a significant drop between X1 and X2. So 5%. Okay, decrease of 5%. So you have to investigate. So this is the analytical procedure. So you compare the financial and non-financial data. So how the company calculate the gross profit margin. Okay, so you divide the gross profit, the revenue with the profit. Okay, so you have to look at all the item relates the relationship, okay, to the gross profit. What item contribute to the gross profit calculation, gross profit margin calculation. So you have to get to know the item in the financial statement. So okay, in order to arrive figure of gross profit, you have to know the figure of sales, okay, less the cost of goods sold or cost of sales. So what are the item under the cost of goods sold, and then you will get your gross profit. So you have to look at all these relationships. Okay, that is the meaning of relationship and the fluctuation. So this is the fluctuation there. Okay, so if at this beginning, okay, of the analytical procedures at the audit planning stage, okay, at the audit planning stage, when you look at to the financial statement of the company, okay, you expect, okay, that the gross profit will increase, or in the case of the situation of economic now, so you will expect that the company's sales will be reduced. Okay, so that is what you expect. So if it is reduced, so then it's okay, but you need to investigate by inquire the management. So that is analytical procedure. It's cover comparisons of financial data with other financial or non-financial data of the same or previous period. Same or previous period. So if you compare year by year, so you have to take year, 1 year. If you compare by month, okay, you have to compare by month. Okay, if you take 6 months last year, okay, so January to June, okay, 2020, So you have to compare January to June 2021. So this is the period, the same period that you compare. Okay, you tak boleh compare last year 1 year, this year half years. Cannot. Okay, and then can be used at all stages. Okay, and must be used at the planning and final review. So this is what I said just now. Okay, when you perform the substantive, the analytical procedure, okay, it must be, okay. So this is must be. Okay, must be done. So maksudnya at the planning stage ni, you don't have a choice. You must perform the analytical procedure. Okay. And at the substantive procedures, it should be performed. Should be ni. Okay, if you think that you want to extend the test, you can perform the substantive procedures during the audit test. Okay. But at the end of the audit, it must be do again. So if you look at today timeline here, so it should be done, sorry, it must be done during the audit planning. Okay, audit planning, and it should be done, okay, during the substantive audit here. Okay, and at the final audit, it must be done again. Okay, final audit, actually final review, see, it must be done again, review. So review means before the audit report issued. Okay, before the audit report issued. Okay, so any question on that? Okay, before I go further, do you have any question? Ada soalan tak, kelas? Ada? Any question ada? Istina?
No question, madam.
No. Okay, I hope still remember what you have learned in planning stage. So, if no question, then we continue with the nature. So, what are the consideration of the comparison? Since you are doing the comparison item, so you can compare with the similar information for the prior period. So, as I said just now, if you compare, you must compare the same information. If you compare gross profit margin, so you must compare year. Okay, X1 and X2. Okay, you tak boleh compare gross profit margin dengan net profit margin. So you boleh compare information yang sama tapi tahun yang berlainan. Okay, anticipated result of the entity from budget or forecast. So if you use the forecast information, so information dia mesti compare dengan forecast. Dia tak boleh actual. Okay, kalau lah gross profit margin ni you take from the budgeted financial statement. So you must compare the budgeted year 1 and budgeted year 2. Okay, prediction prepared by the auditor. So this what you predict. Okay, what you predict, what you expect. Okay, let's say from the COVID-19 situation now. So most of the company affected. Okay, except for the medical health product. Okay, others, okay, normally will be affected, especially to the manufacturing, to the construction company. So what you expect, what you predict. So maybe dia punya gross profit reduce. So tapi kalau kata gross profit dia you expect reduce, tapi dia increase. So you have to better do the substantive procedures on that. Maybe the sales there is overstated. Okay, account receivable is overstated. So you have to check. The prediction prepared by the auditor is not same as actual happen. Okay, industry information such as comparison of the client ratio sales to trade receivable with the industry average. You can compare with the industry average. So what is the performance of the industry on that particular period? Compare the performance of the company with the performance of the industry. And then those between elements of the financial information that are expected to conform to a predicted pattern. Okay, based on the entity's experience, such as relationship gross profit to sales. And those between financial information and relevant non-financial information. So, yang ni selalunya untuk wages and salaries. Okay, if let's say during the COVID situation, okay, most of the company, let's say that company or your client company, terminate the employees. So terminate the employees. So now it should be the amount of salaries or the amount of wages in the expenses will be reduced. Okay, you compare with the number of workers. Okay, if the relationship is consistent with your prediction, so it's accepted. If it is deviate from your prediction, you have to investigate. So that is the meaning of analytical procedure that you are going to perform. Okay, you can compare from simple comparison to the complex analysis using statistics. So depends on the clients that you are audit. Okay, what are the risk assessment procedures? So this is the analytical procedures as assessment procedures. So when it happened, so this it happened at the planning stage. Okay, planning stage. When you are you perform the audit procedure to identify any possible of material misstatement. So at the planning stage, the first one must be performed. Okay. So auditors must apply analytical procedure at risk assessment procedure to obtain understanding of the entity and its environment. Okay, so this one. Okay, how you are going to identify the possible of material misstatement? Okay, after auditor understand the client's business entity. Okay, when you understand. So procedure to understand the client business entity. So you have learned in audit planning. Okay, so what are your sources of information? So you can use your the company's interim financial information. So use Q1, Q2, Q3, Q4 information. Because why you need to use Q1, Q2 and so on? Because you are at the interim audit, not the financial statement, not the complete financial statement does not come out yet. Okay, so it's happened 1st January. Okay, let's say 2020, 31st December 2020. So the financial statement not yet prepared, the complete one. So you use Q1, Q2, Q3 and Q4 information. Budget. So budget will be prepared before. Okay, budget. So budget kat sini dah buat. Okay, during the interim period ni dah buat budget. Okay, budget. Okay, and then management account. So this is come from the production department. Okay, nak tengok how many number of workers and so on. Non-financial information, this is number of workers. Okay, bank and cash record, sales tax return, board minutes and discussion with the discussion or correspondence with the client at year end. Discussion with the clients. Okay. Auditor must use specific industry information or general knowledge of the current industry condition. So you, as I said, you can compare with the industry average. Okay, industry average. And as a result, you able to determine nature, timing and extent of audit procedure. Because after you use all this information to perform the analytical procedures, it might be able for you to indicate aspect of the business of which the auditor were previously unaware. Okay, and then the auditor also might see certain area or problem might be occurred, okay, in the past. So that's why in conclusion, you can say that when you perform the analytical procedure at the risk assessment procedure or during the planning stage, okay, you will be able to identify any area of potential material misstatement. Okay, so which normally where it deviate from your prediction. Okay, analytical procedure at the substantive procedures. So this is the second one. Okay, where at the planning stage just now you must perform. Okay, you must perform. So this one. Okay, you must perform. Must be perform. Tak boleh tak buat. Okay. For the substantive procedure, it should be performed. Okay, so means that if it is if you think it necessary to perform to extend your audit procedure, then you perform. If not, no need. Okay, the auditor may also seek to obtain relevant and reliable audit evidence when using substantive analytical procedure. So what are the factors that you can factors that you want to consider, okay, whether you want to perform or not the substantive procedure during the audit test, okay, the analytical procedure during the substantive procedures. Okay, bila you nak guna or bila you rasa you want to perform. So when you think that it is suitable of using substantive analytical procedures, so it is more applicable to the large volume of transaction. Okay, and then when you think the reliability of the data, okay, is necessary, okay, you need to get more reliable of the audit evidence, then you perform the analytical procedure. And when you think that you expect it is it is more precise to you, okay, to perform the analytical procedure, okay, during the desired test or level of assurance. So means if you perform the substantive procedures, okay, at that particular item, then let's say you have performed the details of test. Okay, let's say to the sales. Okay, details to means that you test individual item, then you identify that you need precise evidence. So you need precise evidence regarding to the sales pattern. So you might perform the analytical procedures. Okay. So you look at to the degree of the test. okay, or degree of the sufficiently of the audit evidence you want to gather. So if you think that you are not satisfied, okay, with the test of details you perform to that particular item, okay, you can perform the analytical procedure to make your audit evidence sufficient, okay, sufficient sufficient and appropriate. Okay, and the amount of any difference of recorded amount from expected value that is acceptable. Okay, so if you identify that differences of recorded amount from your expect, okay, from that particular item, then you prepare the analytical procedures. Okay, so that are the 4 factors that you should consider, okay, when you want to use the analytical procedures during the substantive test. Okay, because it's not compulsory. Okay, it's not compulsory. When do you think that you need to gather sufficient appropriate audit evidence and you need more precise evidence, so you can perform the analytical procedure. Okay, and the last one is analytical procedures as part of the overall review. So this is at the last stage, okay, at the overall review before the audit report come up. Okay, the auditor must design and perform analytical procedures, okay, near the end of the audit. Okay, near the end of the audit that assist the auditor when forming an overall conclusion. So this is to assist the auditor, okay, when forming an overall conclusion as to whether the financial statement are consistent with the auditor's understanding of the entity. Okay, because at the early stage tadi, at the audit planning stage, okay, you have understand the client business and industry. Okay, you understand the client business and industry already. Okay, and you already determine what are the risks involved. Okay, whether it is a financial statement risk at the assertion level or you extend to the substantive to the detection risk. Okay, so you already determine the financial statement risk or risk of material misstatement. So, okay, when you perform the test and at the beginning on the review stage, okay, you already know the result of the company. Okay, the result because you already perform, okay, the substantive test study. So at the review stage is near to the end of the audit. So you already get the result. So this result, whether it is sufficient and appropriate evidence has been obtained. Okay. So if you want to measure whether you gather sufficient and appropriate audit evidence, then okay, you have to compare or to perform the analytical procedure at the review stage. So why? Because you want to see whether your earlier knowledge and the last knowledge regarding the result is parallel, is or are consistent. Okay, are consistent. So the conclusion from this analytical procedure should corroborate the conclusion from other audit procedures on parts of the financial statement. Okay, however, this analytical procedure may highlight areas which require further investigation and audit. Okay, further investigation. So when you have further investigation, you need to perform back your substantive test. You need to perform again or to perform further substantive procedures. Okay, so kalau masih ada differences, okay, differences of the result, so must perform, okay, the substantive procedures again. Okay, until you get the sufficient appropriate audit evidence. So at the end, you issue the unmodified audit report. Okay, audit report. Okay. So if you still if you identify any fluctuation or relationship that are inconsistent with other relevant information or that differ from the expected value by a significant amount, the auditor shall investigate such differences by inquire the management, obtain appropriate audit evidence, and perform other audit procedures. So that's why I said just now. So how you are going to perform the investigation? You inquire to management and corroborate of the management response. So by comparing them with the auditor's understanding, okay, and then by undertaking additional audit procedures. So that's how you satisfy yourself in order to gather sufficient and appropriate audit evidence. So this is why I said just now, what are the purpose of analytical procedure? Used to identify relationship between financial data or between financial and non-financial data. So this is first one. Okay, their purpose is to identify consistencies and pattern or significant fluctuation and expected relationship. So that is the second one. They assist in increasing auditors' understanding of the business. So this is during the audit planning. Increase auditors' understanding of the business and can be used to aid audit efficiency by highlighting risk area and providing an alternative means of audit assurance to extensive of details tests. So that are the purposes. Okay. And at what stages of the audit should analytical procedure be carried out? It must be performed at the planning stage, must be performed at the final review, and may be used as a substantive procedures. Okay, and you have to state what is the objective during the planning stage. Okay, as part of the risk assessment to ascertain which area of the accounts acquire particular attention, and for the stages at the substantive to provide evidence for the various financial statement assertion, and at the final review to see if the financial statement are consistent with the auditor's knowledge of the business. Okay. So these are the ratio. Have you familiar with this formula, class?
Yes.
Yes. Where you learn it?
FME.
FMA dengan
FFE.
FFA. Okay. So I hope you already remember formula, remember? Ke dalam FMA dia bagi? Is it the formula given in the exam? Remember. Have to remember, right? So I think you don't have any problem because you already learn in FMA and FFA. So just to record back, you have to read lah back gross profit margin, gross profit divided by revenue, Okay, and then you have to look at the relationship. Okay, receivable collection period. So in the days, so answer should be in the days. Okay, payable payment period also in the days. Okay, this is in percentage. Okay, this is also in the days. Okay, inventory holding period, current ratio in the ratio. So it's no need to convert to the percentage. So this is maintained in the ratio. So example 0.1 or 0.2. Okay, at quick or asset cash ratio. Okay, you have to deduct the inventories. Okay, also same, maintain in the ratio. Gearing ratio, so in the percentage, you have to time with 100. ROCE, okay, maintain also in the ratio, and asset turnover maintain in the so asset turnover, when we talk about turnover, you have times. Okay, so in times. Okay. So these are all the significant item relates. Okay, if you talk about payable, so it's come with purchase. Relationship there, payables, relationship with the purchase. Inventory normally relates with the cost of sales. NCA, okay, relate with depreciation and repairs and maintenance. Profit or loss on disposal, okay, on the non-current asset. Intangible asset and amortization. Loans and interest, okay, investment and investment income. Receivable and irrecoverable debt, and receivable and sale. So these are the pattern of relationship. Okay, relationship. So you know already how to calculate the ratio. So I can skip that one. So other areas, okay, what you have in the exam focus. So as an advisor, okay, you might have been looking for how profitable. Advisor means when you look at from the perspective other than the auditor. So you as a financial advisor, you might have looking how profitable of the company. Okay, you look at how profit of the company, how efficient of the company, okay, in managing their inventories, and the essence are looking at how good or bad the company's performance. So that's why normally you are looking at whether the company is efficient or not, whether the company is good, okay, in managing their inventories and so on. Okay, but as and from the perspective of the auditor, it's different. Okay, when you look at the ratio analysis, okay, as part of your analysis, okay, actually you are focused on identifying area where the financial statement may have been over or understated. Okay, you must look at that. Okay, whether the item in the financial statement is correctly recorded. This is what you are going to find out. Okay, correctly recorded. So you have to check whether the amount is over or understated, so that the ratio will be helped to identify possible area of errors. So that's why you perform the ratio analysis. It's not because you are going to look at the efficient of the management or the efficient resources, or you want to look at how profitable of the company. Okay, so sometimes the company is look good, okay, on paper. Okay, so ratio analysis is very good, but then when you look at to the detail insights of the item, okay, you might identify area of potential misstatement. Okay, for example, as a financial advisor, you may view an increase in gross profit from the previous year as positive sign of the company has made its supply and chain more efficient. Okay, from an auditor's point of view, however, An increase in gross profit may indicate an overstatement of sales or an understatement of the cost of sales. So what you are going to practice here, you have to practice professional skepticism. So you might put doubt, or questioning in mind regarding the information given by the management. Okay, as an auditor, you are not primarily using ratio, to assess how well or poor of the company is, but to identify whether the financial statement may be misstated. So you can look at certain things you might need to investigate. Examine changes in product, customer and level of returns. Assess the effect of price and make changes in the cost of sales. So the price increase, what happened to the cost of sales? The mix of changes in the price, what will happen to the cost of sales? Okay, because it involves cost, sales and the purchase. Okay, sales and purchase. Okay, revenue and cost. Okay, and then consider the effect of inflation, industrial dispute, changes in product methods and changes in activity. So in the case of the economic now downturn, COVID-19, so it will affect the overall result of the financial statement of the company. Okay, obtain explanation for all major variances. Okay, you need to obtain why there is a changes in the ratio. Okay, compare trends in production and sales. So the pattern of sales, okay, from year to year, okay, increase, decrease, so that is the pattern. Increase or pattern dia macam mana? Okay, is it high to low, high, moderate, low and so on. Okay, ensure that changes in the percentage level or overhead content. Review other expenditure in the statement of profit or loss and other comprehensive income. Okay, and then review item in the support also. Okay, you will see any omitted item and ensure expected variation arising from the following have occurred in terms of industry or local trend or non-disturbances of the trading pattern. So kalau ada trading pattern such as strike, macam dekat mana, okay, company kat US, dekat outside Malaysia selalu buat strike. So what happen if the employees, okay, having the strike, okay, depot closure. So depot closure. So what happen? Failure of suppliers. Okay, what happen? Yes, who raised the hand? Any question? Yes.
Strike ni macam mana? Selalu nampak tapi tak faham.
Right, buat apa? Piket, bukan buat apa? Piket. Macam dia buat demo yang buat apa? Kumpul-kumpul tu, yang dia macam mana? Kalau kita macam apa demonstrasi macam tu lah.
Oh, macam mogok-mogok tu benda.
Yes. Mogok lah. Strike tu mogok. Yes.
Okay, faham.
So when the employees do strike, so production does not run kan? So they have a production stop kat situ. Stop production means incur cost maintenance. So that's happen. That's affect the cost of the company and also the sales, the cost of sales of the company. So look at to that pattern.
Okay, thank you, Madam.
Okay. So and another concern on the analytical procedures ni is going concern. This is important. So going concern we will cover in chapter 15, but at the beginning stage here you must look at also the pattern of going concern. So if the company having a high gearing ratio, so which one is gearing ratio? Yang mana gearing ratio? This one. So if the company having high gearing ratio, so if the company having high gearing ratio, that is a possible of indication, okay, on the going concern. So they heavily rely on the loan. Okay, when they heavily rely on the loans, so the ability to pay the loan, okay, may be reduced. So what will happen on the going concern? So kita akan tengok chapter 15 in detail. So that is the sign of activity, okay, of the company also. Okay. Before we go for break, look at to this question. Which of the following is not an analytical procedure? So yang mana satu bukan analytical procedures? Don't look at to the answer, must understand. So when you talk about analytical procedure, what is the word should you include? Apa keyword dia? What are the keyword?
Compare.
Yes, compare. So which one is not compare? A, B, C, D. Which one not compare?
B.
Mana kelas? Jangan tengok jawapan bawah tu. Check, compare. So which one is not compare?
B.
B kan?
B.
Check. Look at A. A, consideration of comparable information from prior period. So yes. Second, consideration of whether a list of balance cast correctly. Cast. Cast ni apa itu kita belajar cast? Cast apa? Ingat lagi casting. Casting. Casting the total. Cast ni campur kan. Daripada atas sampai ke bawah kira betul tak? Kalau list of try balance, cast. So cast. Kalau ada 20 balances kat sini, casting dia total up semua ni. Betul tak figure ni? So itu cast. So is it compare? Is it cast is compare? Kelas. Ada, betul ke cast to compare? Dah hilang dah soal ni. Sekejap lah, belum lagi, baru 9.42.
Tak sure madam.
Tak sure. Cast tadi kan I kata cast ni, you ada list of try balance. Ni macam ni you ada casting ni. Okay, contoh lah je. So this is the balances kan. Lepas tu you total up kat sini bawah ni. So you cast. So amount dia, katalah dia letak amount kat sini 2 million contoh. Okay, 2 million. So what should you do? You cast. Ambil calculator, you campurkan semua ni, tambah semua ni, betul tak amount dia 2 million. So kalau betul, tick macam tu. Betul. Okay, so itu you buat dalam audit lah. So you cast ni kira balik. Campurkan semua. So is it compare? Ada?
No.
No. So this is not compare. Okay, tengok yang ketiga. Consideration of whether an amount is approximately to a prediction calculated by the auditor. Prediction calculated by the auditor. Whether an amount approximate to. Approximate to. So maksudnya dia buat comparison. Right? Baca dekat ayat tu betul-betul. Is approximate to a prediction. So that is compare. Consideration of company statistic against pun compare. Okay, similar industry information. So the answer is B. Okay, agree. Boleh ada?
Boleh ada.
Okay, so I give you 5 minutes break. After that, we will look at this case study. Okay. Break dulu kelas, 5 minutes. Okay, class? Done? Okay, shall we proceed?
Yeah.
Okay. Okay, now we proceed with the case study. Okay, okay, look at to the case study. So you are given so this how the auditor do the case study for Brown and Co. Brown and Co. Remember the Joe Price? Okay, so this is the Brown and Co. Company. Okay, this is audit by Joe Price. Okay, so this is the example for draft figures for year ended 30th September X1. So these are the item that Joe Price identified. So the revenue, okay, gross profit, profit before tax and interest and tax. Okay, revenue, gross profit, profit before interest and tax, PPE. Okay, this is not the PPE whereby the medical officer to PPE is property, plant and equipment. Inventories, receivable, trade payable, other current liabilities including bank. And then Joe Price use this information during her planning process. So he calculated the following ratio. So he calculated, these are the key ratio that she calculate. Okay, look at to the key ratio. So you must be able to calculate the key ratios. So not all ratio will be used by the auditor. Okay, the auditor only highlight the key ratios regarding the information given in the financial statement. So they calculate the gross profit ratio. So gross profit divided by the revenue. Okay, gross profit divided by revenue, receivable collection period, average inventory holding period, current ratio, asset test, and return on capital employed. So these are what Joe Price identified the ratio. So however, this information is only of limited use to her isolation. She should refer to the previous audit file to compare this ratio to the last year. So where did she get the information on the previous year's file? So then do not to calculate this year, just take up from the permanent file. Okay, permanent file. Okay, from the audit documentation or audit working paper. So they extract the figures for the year ended 30th September 2080. So these are all the information that she got. And then again, they have to take the same key ratio because you must compare the same information. Okay, the key ratio, the same key ratio from the year 2000 X1 that she calculated just now. This one. So when she calculates, so this information letter will be put in the current file. Okay, current file. This one extract from permanent file. So okay, if you what should you do in audit? So I summarize here. So can you see the spreadsheet?
Yes.
Yes. So this is the spreadsheet that I prepare for you. Okay, what actually you want to do, okay, in the audit. Okay, so you take the extract draft figure. So for X1, okay, X1 and X0. Okay, X1 and X0. So you just extract, take out from normally, okay, in the question in the final exam, maybe you have to calculate or may not, because you might be given all the information but you just do your changes here. Okay, so you just take the information from the case study, so put it in the column, so x1 and x0, compare. So what you expect, okay, what you expect and what is the changes happen, okay, the changes. So if you see the changes, okay, you put all the information first, okay, x1, x0, then you put the information for the ratio that you calculated, okay, from the current year and last year. So this is from working paper, and this what you calculate. Okay, so this you put as a remark. Okay, you put as a remark. Remark means, is it fair or is it deviate? Okay, deviate. So gross profit margin, so you have 37.65 for the year 1, and from the working paper last year 37.10. So means that it's not drastically changed for the year, so you put it at 5. So receivable collection period 84 and 85 also does not have any unusual changes. Okay, inventory holding period from 114 days, from 89 days to 114 days, so increased by 25 days. So this is a quite huge changes. Okay, so need to investigate. So this is what is the result, deviation from the previous result. Okay, so actually if it 89 to 90, it considered fair, but if the changes is quite huge or drastic changes or fluctuate drastically, so you have to investigate. Okay, and then for the current ratio, decreased by 0.7, actually does not have much impact. Asset test ratio also does not have much impact. Okay, and return on capital employed, okay, from 27 to 21. So this is also huge effect. Okay, so what should you do next is, okay, you look at to the changes item pula, because you are going to look at the relationship. So now gross profit margin is a fair. So maksudnya tak ada drastic deviation. Okay, so you expect that there is no drastic changes in revenue. But what going to happen here? So the changes, yeah, is a decrease by 1,386 to 22. Okay, so what you expect actually? So dia increase by how many percent? Okay, you expect it have a decrease in revenue by having the amount is quite significant. Okay, so you have to use the word significant. Okay, significant. So what is the reason? You have to identify the indication why there is a decrease in revenue. So look at to your book. Okay, why is a decrease in revenue? So maybe major customer loss. Okay, decrease in revenue. Sales dia berkurang. Maybe because of COVID-19. Okay, so look at here. Okay, revenue. The figure show that there has been a drop in revenue of 1,386,022 dollar. Joe should discuss this with the client. It could indicate several things. So what is the indication when the drop when there is a drop in revenue? So you have to discuss. So what are the indication that tell to you? Okay, so this is what happened in when you understand the clients, business and industry. So this you perform at the planning stage. So the company has had a bad year in 2000X1 with potential impact on going concern. So maybe, okay, by looking to the situation of economic, so you know that 2000X1, okay, the economy is not good. So there is a drop in revenue. Okay, but the question is, how is the impact on the going concern of the company? So question mark. So discuss with the management. Okay, is it this drop in revenue will impact to the ability of the company to pay their debt? Sebab dia dah revenue dia dah berkurang, sales has been reduced. So do the company able to pay their interest on their loan and so on? So that is indication, indication. Okay, that the company had a particularly good year. Okay, good year in 2000X0 and 2000X1. Okay, is more representative of the what the company expected. Okay, good year 2000X, but 2000X1 is not what company expect. So that is only indication that you should ask yourself. So that's why I said you must be skeptical. Major customer has been lost, so you need to inquire with the major management. So look at to the account receivable. Okay, account receivable. Okay, is the account receivable reduced? So this one, look at to the account receivable here. Okay, so compare the amount of receivable. Later we look at. There have been error, maybe errors in recording sales. Lack of completeness in recording of sales. Okay, yang item drop ni, kita nak tengok what are the possible impact when the drop in revenue. Maybe error in recording sales, maybe recording of sales incomplete, misclassification of sales, incorrect application of cut-off, inaccuracies in the accounting record, or any possible fraud. Okay, so when we look at to the account receivable, account receivable reduced. Okay, yes, account receivable reduced. So as what you expect, it's the expectation, yes. So look at to the profit before tax increase, profit increase. Okay, you see increase in profit. So do you expect increase? Actually not, because you have reduction in revenue. Should be profit before tax reduce. So this what you not expect. So this is relationship which are not good based on your understanding. So maybe because of what? So look at to the findings. So profit before tax. Okay, Joe might expect the profit before interest and tax to drop. Okay, because the revenue figure has dropped, okay, by a significant amount compared to the last year. However, because of the profit before interest and tax figure is approximately the same as it was in 2000X0, this could indicate several things. So be skeptical. So what is the indication? The company has implemented cost saving, maybe. That there have been error in recording expenses. The amount of interest payable has reduced. That management has tried to improve profit figure by not recording all relevant expenses for the year. So these are all the possible things that you have to think, okay, when you discuss with the management. Okay, you inquire management. Okay, inquire the management. Okay, what should you look at? Joe Price should discuss with the client, okay, to find out if any cost saving measure has been implemented or if there are any other factors which could have resulted in reduction. So you need to discuss this. This is important thing. Okay, and other things you have to look at on the receivable. Sebab tadi when the sales decrease, okay, when sales decrease, so maybe the account receivable also decrease. So look at to the account receivable. Okay, account receivable reduced by 301,137. So what is the possible of the account receivable there? Okay, the receivable figure has reduced by 301,000 compared to year at zero. This could indicate several things. There were less sales in the last few months. Okay, less sales in the last few months. Okay, of this year compared to last year, so that are less outstanding receivable at year end. So if you look at to the sales just now, sales increase overall. Okay, for the whole year, sales increase. But why the receivable figure has reduced? So maybe the sales in the last few months, okay, has been in this year there was less sales few months of this year compared to the last year. So that there are less of outstanding receivable. Customers are paying more quickly. So look at to the day outstanding. Okay, day outstanding. Okay, day outstanding. Look at today inventory holding period. Oh, okay, tak ada pula account ni, yes, receivable collection period. Sama. Okay, fair. So it should be reduced. Okay, tapi sama. So okay, you see that customer are paying more quickly than they did in the previous year. So that there are less outstanding receivable at year end, more quickly. So maybe quickly by how many days? How many days? 1 day. Okay, 1 day quickly. So that's why the receivable has been reduced. Okay, and then there have been error in recording sales and receivable. So this may be ada potential of material misstatement. So what should Joe do? Joe discuss with the client and perform further analysis based on the result of detailed month. They perform further analysis. Okay, and then for the inventory. Okay, look at for the inventory. Okay, inventory holding period has drastic changes. So you have to look at the relationship with the inventories. So inventories increased by 48,000. Okay, 48,103. So what is the possible? Okay, what is the possible indication for the inventory? Okay, the inventory figure has increased slightly compared with 2080. However, the inventory holding period has increased significantly from 89 days to 114 days. So the holding of inventories is higher. Okay, is higher. This increase in the inventory holding period could due to reduction in the total number of production sold. Okay, ada pengurangan, okay, in the number of production sold. Incorrect valuation of inventories. So this one you need to perform detail of test. Okay, an error in the cost of sales or inventory figure. So these all the possible indication that might be happen, okay, at the planning stage. Okay, due to the result of the ratio analysis done during the assessment procedures. Okay. So, okay, what should you do? Okay, you should discuss with the client and could perform further analysis based on the result of the detailed revenue testing. Okay, Joe should also plan to perform additional procedures around the valuation of the inventories as well as carefully review the result of the inventory count testing her team perform after year end to verify the inventory was counted accurately. So these are the detailed extent of procedure that you should do. So for the exam focus, okay, what you should know regarding the analytical procedure is, okay, you asked to calculate changes, key ratio, and hence identify significant area of the financial statement. So you must able to extract the information here. Okay, you take the information current year, previous year, see the changes. After see the changes, look at to the relationship, okay, with the changes of the ratio. Okay, relationship, okay, of the ratio, and predict for indication. Okay, so this one, ask what audit work will be required on these significant areas. Okay, when analyzing figure, make sure that the point which you make in your analysis are consistent with each other. Analytical procedure are important means of gathering audit evidence. On a practical note, remember to take calculator. So means you have to bring your calculator in case that you have to calculate your ratio. So this what you do in the ratio analysis. The relationship, okay, if it is not consistent, okay, you have a indication here. Yang ni you kena fikir lah. You have to think by your own. And action, whatever it is, discuss with the management. Action is simple, discuss with management. But possible indication ni, you have to think. Macam you think on the deficiencies of the test of control. Okay, it's the same thing. Any question? Ada masalah tak tentang how you want to perform your case study analysis? Okay, case study analysis. Any question?
No.
No. So, if no question, then so just look at on this second case study. So kita tengok dia punya okay, this is not the level of your question because you just need to identify to indicate the possible misstatement and what are the indication of the ratio and how the relationship exists between the ratio and the information. Okay. So this one, you must have the key ratio. So these are the key ratio calculated. What I want you to highlight here. Okay. Look at to B point. So when you have increase in inventory, I just highlight a part yang selalu asking in the question is on inventory. Inventory, sales, account receivable, okay, gross profit margin. So these are, and also gearing ratio. So you need to consider, okay, the possible indication on the inventory, okay, as compared to the sales, account receivable, gross profit, and gearing ratio. So inventory value has increased by 229%. So you look at the huge or the significant increase. I just to highlight the important things that you need to consider. Okay. Okay, so these are your inventory value increased by 229%. So it considers significant significant. Okay, and the gross profit percentage has increased substantially in considering whether inventory has been overvalued. So you, bila dia increase significantly, so you have to skeptical that inventory may be overvalued. So what should you do in your extent? Okay, has the counting of inventories been carried out completely and accurately? So you should ask, okay, yourself, okay, whether the counting of inventories has been carried out completely and accurately. Have all inventories been counted once and once only? So kita dah buat test of control kan? So you must look at the procedure or observe the procedure for the counting of inventory. So you must look at that there must have a proper procedure to avoid that the goods, okay, will be counted twice. So you kena tengok all the procedures given by the inventory counting, and then has the summarization of the inventories has computed accurately. So this is the question that need to ask yourself to be skeptical on the overvalued of the inventory. Second, is inventory valued at a lower of cost and NRV? So is that following the standard? So that is the second question. In order to test for NRV, I would match a sample of line of significant value to selling price after year end. If items are sold at less than cost, they should be valued at NRV. So compare. So when you do the test of NRV, you kena tengok compare cost and NRV. Okay, nak jawab soalan on the overvalued. Okay, is the recording cost of inventory correct? So how the inventory has been recorded? Okay, so you need to perform the test. So this is substantive test. Okay, on the purchase invoice and re-perform calculation. So you have to perform the substantive test. So this is what I said just now, where the analytical procedure might be performed during the substantive test. So you might do your analytical procedure during the substantive test. And then you test also on the slow moving or obsolete item. Okay, because you want to get the correct valuation of inventories. Has sales cut off been performed correctly? Sales cut off, is it the sales has been recorded at a proper period? Has the sales being recorded at a proper period? So this what you should test. Okay, you must perform sales cut-off test. Okay, and also the account receivable cut-off test. Okay, in view of the lack of proper system of recording the dates goods were received, has the purchase cut-off been performed correctly? So look at to the purchase cut-off pula. So because when we talk about inventory, okay, it will include sales, purchase, return inwards, return outwards. Okay, so perform also purchase cut-off test. The increase in the gross profit percentage should be discussed with the management in order to establish if there is any non-reason for increase. Okay, so discuss with the management. So that is how the process of analytical procedures going on. Okay, sama juga in other item, account receivable. Okay, so the main thing, okay, is you must know what relationship, okay, of the information. Okay, information. Okay, you tak payah hafal or whatever, but you must know only item in, okay, item in the okay, item in the statement of profit or loss and comprehensive income, and item in the statement of financial position. Itu saja relationship dia. And also look at to the notes to the account. Okay, on the disclosure. Okay. Any question, class? Ada soalan? Ada soalan tak? Any question?
Enggak ada, madam.
At this
Sekarang.
moment, okay. So, lepas ni nak masuk on the accounting estimate. So, accounting estimate nak break sekarang ke ataupun nak sambung? I dah habis dah tentang ratio analytical procedures tu. So if no question, then kita break dululah. After that, I akan sambung on the accounting estimate. Boleh?
Boleh, madam.
Okay. So kita break dululah half an hour. So after that, we continue on the accounting estimate. Okay.